Let's talk about some of the most common myths and misunderstandings that exist around reverse mortgage loans. I've heard them so many times, it kind of just makes me crazy. We've all heard that reverse mortgages are somehow too expensive. The truth is that with a reverse mortgage, it may be more expensive in closing costs than a traditional mortgage. They also may provide you with way more options than a traditional mortgage, such as no monthly payments, which is quite a bit cheaper than a regular loan, and a line of credit with a growth option that gives you more money as you get older. And the biggest expense is often the mortgage insurance premium, but that's the feature that makes sure you'll never owe more than your home is worth. And it guarantees that you can live in the house until you're at least 150. Yes, I said 150 years old, which brings up another common misconception, that your home will be taken away by the lender when you pass away. This is also not true. The house remains in your name. You or your heirs make that decision to sell or pay off the mortgage balance. If the mortgage balance is too high, your payoff is limited to the value of the house, and the remaining amount is paid by the FHA Mortgage Insurance Fund. That's why you paid that mortgage insurance premium at closing in the first place, which makes it even more valuable and very much worth it. Now, some people think their house has to be paid off or debt-free to qualify for a reverse mortgage. In fact, many people use the reverse mortgage itself to pay off their current mortgage, provided the reverse mortgage proceeds are sufficient enough to pay off all the loan balance. And they go from making a monthly mortgage payment to having their payment be zero or completely optional. You just have to live in the house as your primary residence, maintain the home, pay home expenses such as taxes, insurance. As long as you live in the home and maintain those loan terms, you'll always own the home and be on the title. The deed always stays in your name, and you have all the rights that you do now. You can sell it, remodel it, keep any equity that's left when you move, or your heirs can keep the remaining equity if you pass away. And lastly, you never need to worry about your children getting stuck with a big mortgage debt. This is another big misconception. Your children or your estate can never, absolutely never, be liable for any of the amount over the value of the home because of that FHA Mutual Mortgage Insurance Fund. That pays those losses. You're always protected, and that is why the mortgage insurance is so valuable.